All right. Hey, Niklas.
Oh, hey.
Good to see you again. We should be live now. I think we are. Yes, we are. Welcome to a casual chat with Niklas Agevik on how to pitch investors and to basically succeed with your fundraising. It's obviously a very, very tricky thing, and one of the most common challenges for entrepreneurs is fundraising and getting investments, and also super relevant now because many, at least from what I've seen from our community, that started fundraising this year has noticed a significant decline in speed of decisions. So the sort of the cycle to close the round has dramatically slowed, and that's why I think it's super good that we can get your input, Niklas, and your experience around fundraising. And we just came out of a workshop, which were, I think, one of the most popular workshops we've done in terms of attendees and ratings. I'll need to look at the ratings afterwards, but a really good session, and it basically confirms my thoughts that this is very, very relevant and super, super important. The purpose of the Fireside chat is to take some of to cherry pick some of the topics that we discussed exclusively with our community, but also share it on open channels. So there might be some people out there who could benefit from this. So that's the core purpose of this session, basically. And Niklas, thanks so much for sticking around and sharing your insights.
Yeah, no, it's a pleasure and like super cool to be connected back a bit to Sub 46. I mean, it's been, 10 years? Since
9 years. Yeah.
9 years since we
Yeah.
were sitting Sub 46 in the old office. So that was super cool.
Yeah. I think it actually was Kriandum who introduced us. Was that?
Could have been, yeah. I think
Yeah.
so. Yeah. We had a big corner office. We did tell a good story on us, but I think we were one of the few who were venture funded actually when we joined. So
Yeah,
we're a bit ahead of the curve.
really, really early on too. Yeah. Do you want to just quickly do a quick introduction on the topic of like investor pitching and fundraising? Could you just quickly mention your background and what you've done, and just to make sure people understand why it makes sense to listen to you?
Yeah, absolutely. I mean, I've done a bunch of different startup projects, worked at different startups, but I think the one I'm most famous or infamous for, it was a couple of years ago, and I'm not sure if everyone remembers it, but I did a startup called InstaBridge. It was an app that we grew to 20 million MAUs. We raised 100 million SEK on that, and this was in the times where you could raise money without revenue. So I think we had a little bit easier. But I wouldn't say our fundraising process was particularly easy. And it was also a time when InstaBridge won every single pitch competition that we entered, basically. The one I'm most proud of winning myself was the best international startup at the launch conference in San Francisco. We had pitch training from Sequoia and Benchmark Capital and Jason Calacanis. And we won against some companies that are unicorns today. So InstaBridge ultimately failed, like it didn't work out, but I don't think it was for lack of pitching, at least. So I think the message I had, like in the session we had with the Sub 46 companies, a couple of minutes ago, was just that yes, startups are about building a great company. But if you are going to go out and raise money, I mean, make sure you do that well and quickly so that you can spend your time actually building that company. But today, I hate the term, but professional CEO, work at Verdane, a venture capital firm, and at CEO at Reason Studios. We're a company that make software for musicians. All of the skills that I've learned, and especially storytelling that I found particularly interesting at InstaBridge, and storytelling and leadership, all of those skills are things that I use here. And this is a real company, like 100 million SEK in revenue, 24 million SEK in EBIT, 47 employees. But still, it's a couple of zeros at the end. But I think the skill set is the same as you learn in a startup.
Yeah, really good. I want to start off with if you can just quickly talk about what you believe needs to be in a great pitch.
Yeah. But I think first of all, I think a pitch is never better than your startup. Like after a while, you get in this Adam Newman WeWork territory, where the pitch is bigger than your startup, and I think that's important to remember. Like if it's not possible to pitch your startup in a good way or make it exciting, maybe it's not the pitch that need work, but the actual startup. But that said, I think a lot of the pitch work, like if you practice explaining your startup, I mean, sometimes you actually find things you can tweak in your startup that makes it better. But in my mind, I think a great pitch activates both part of the brain. I mean, it has something for the right part of the brain, and the right part, that's where our creativity and ideas and intuition lives. Just gets people excited. Like you're trying to solve something that's fun. This is something I want to be part of. Like this sounds like something that I want to spend my time on. And then but also has food for the left part of the brain, where our logical thinking lives. I mean, it makes sense logically, like you have the right KPIs, you're in the right stage for the fund and so on. So I think a good pitch has both. And I think a lot of investors I think we are not just investors, but I think all of us, we like to think ourselves as very logical animals. Yes, we compare different options and we pick the best option, but I don't think that's what people do. I mean, they make a decision with the right brain, like they want to do something, and they justify it with the left brain.
Yeah.
And I think investors are no different animals than that. I mean, they are the same. If you get people excited, if you get the right brain on board, they and you have the things on the left brain, like the KPIs, then people will want to invest. But I think the other way around is is much harder. Like if you come with somebody, you have we have this ARR, we have this type of customers, but it's not something that people get excited about. Like this is not something that I feel instinctively in my gut, like I want to do this. I think you're more of an uphill battle actually. So that's what I think that's the core of my message here. Like the great pitch has like a little bit of both, some food for the right brain and some food for the left brain.
Yeah. What about, you mentioned it, like what makes you need to get people excited? How do you get people engaged and excited with what you're doing? You used the old Greeks and the structure of speeches and like could you talk about that for a second in terms of like the structure and how you would go about to trigger those type of emotions?
Yeah, no, I think that these are very well known principles. I mean, we've known this for thousands of years, how to tell a good story, and especially tell a memorable story. I mean, Aristotle wrote about this with ethos and pathos. But I think it's just connecting back to those core principles, like how do you tell a good story? And there's no like Jedi mind trick that like this one thing, and then you tell a cry story at the beginning of the pitch, and then like suddenly everything works out. All of these things has to be in the pitch. I mean, it has to be very simple. Like a lot of startups, like they go off the rails there, and like they provide too much information. It has to be concrete. You have to come off as credible. One book here recommended to Sub 46 is Made to Stick. I think that's a great book. Like they've taken those old Aristoteles principles and packaged them in a modern way. And of course, like a little bit of emotion, a little bit of a storytelling. Why should you care about this? Like, who are you solving a problem for? But I don't think like there's any one Jedi mind trick, like do this one thing, and then immediately you've triggered this emotion and get people excited. I think it's about going back to those core principles and understanding how you tell a good story.
Yeah, this is the book you mentioned, right?
Yeah. Yes.
Made to Stick, and
Exactly.
they're combining the best of both first, the rhetorical masterclass with a modern way of communicating.
Right, exactly. And again, like, this is a short book. Like, this is something, this is a fun read. I mean, this is something that you're going to read in an evening or two. And again, I think, I mean, after rereading that book, I ended up giving that talk for 46, and I realized, how easy it is to forget that, like in your day-to-day life, like you're talking to people, you're trying to recruit somebody, but you forget, to do a little bit of prep work, like, can we simplify that? Like, what's the core of the message? And so on. So yeah, absolutely a book I recommend. I mean, there's more. But that's just one of them.
Yeah. And something that you also talked about is like practicing. What do you think about? Let me change like that, because that's what you mentioned. That's like refine, if I remember correctly from one of your slides.
Yeah, exactly. No, I think, the stories that we as humans have told each other on the campfire, like the kind of stories that have been told for thousands of years, these old fables and so on, like they've been naturally refined. People forget and automatically leave out the things that don't build up to the story, or that are not important. And the point I was trying to make is that, doing this and telling a good pitch, like, it is a craft. Like, it's not something that you just follow a formula or something. Like, it's something that you do when you tell somebody. You tell somebody what you're doing, like you tell them about your startup, and you immediately see where you lose them, like, where they drift off, where they pick up their phone, where they start looking at their watch, and then you remove that. I mean, I made a very deliberate point when I pitched Instabridge that, like, at every meeting I would do something different in the pitch, which was super fun. You can see that part of the pitch, I can leave that out. Like, nobody really cared about that. Like, the pitch works anyway. And I mean, I have an interest in this. I mean, I'd almost call it a hobby. I love storytelling. But I mean, it's not like I'm automatically good at it. I mean, I can't just take a startup and then, repitch it 5 minutes later and it's going to be good. I mean, that takes me time. I need to pitch it a couple of times to make it good. So I think it's just in that process that, keep pitching and pitching and pitching, and like, you're going to find the good in that story. And again, like, it's a craft. Like, it's just practice and refining and getting better at it over time.
Yep. Awesome. And I just want to mention that, like, if there's someone who's watching and you want to jump in with a question, we can see all the comments in the chat, whether you're on Facebook or LinkedIn or YouTube. Just hit us up and we'll bring up the question, and we'll hear Niklas' perspective on it. I want to talk about something that I didn't expect you to bring up, which, when you did, made perfect sense. And that's doing your research on your investor. And I'm not just talking about, like, I'm a fintech B2B company, and then I want to talk about, I want to meet fintech B2B investors. Like, I'm talking about going further than that. Could you just talk about that for a second, on especially the part with the maturity phase of the fund that they're now managing? Could you comment on that?
Right. Yeah, but I mean, at Instabridge and here at Recent Studios too, the biggest predictor of success if we raise money is if we found the right type of investor for what we're doing. Do they invest in your area? And do you have the right KPIs? And you can't escape the laws of physics. I mean, if somebody's a biotech company, it doesn't matter how excited they are about your app. I mean, they're never going to invest. And then, investors love to pretend that they're excited about it anyway. But I think it's important, not to let that take too much of your time, and like, really do your research. Like, are they actually doing deals in this area? And I think one thing I mentioned, for example, for Instabridge, I mean, this was, of course, a high risk project. We were trying to build basically, a community/social network, and we were not promising any early revenues. I mean, this is going to be, make it big and then figure out the how we're going to monetize it later. So it's a big. I mean, it's some. You needed an investor with a lot of risk appetite to go for that. What I mentioned is that there's something called fund vintage. Like it depends on when the fund is raised. Like a typical venture fund will have a lifetime of 10 years. So that means in the first 5 years, you invest in the fund, and then the last 5 years, you return the money to the investors. So if you come to somebody who's early in a fund, they have 10 years to return that money, and then you're more likely to take high risk than if you're in year 5 and you only have 5 years to return that money. I mean, it's a bit like saving to your pension. Like if you start saving when you're 18, you probably take a lot of risk with that money because you've got a lot of time to return the money. But if you're 60 and start saving for your pension, you probably don't want to take too much risk with that money.
That makes sense. It makes also a lot of sense. Like you might, if you're not well informed about the vintage of the fund and how many rounds they've done, you might start thinking about the rejections or the questions or the behavior of an investor as something else. You might start interpreting that as like you're not in in the right spot or something like that. So it really clarifies and bring another dimension to the challenge of actually figuring out what's the right investor for you.
Yeah, no, exactly. And I think if you're a partner or like an associate at a venture fund, I mean, they can meet your startup and they can get excited. Maybe they actually want to do the deal, but they have to invest. They have to convince their partners to do the deal too. And if you're helping them, like if you're doing a good job for them, I mean, like talking to a fund that's early in their stage, then you're making their job easier. I mean, if you're year 5 of some in a fund and they want to pitch something that's super high risk, I mean, you are going to make their job a lot difficult, regardless of how excited they are about your startup.
Yeah. Let's jump to another topic. I mentioned at the beginning that I've noticed decline in speed when it comes to fundraising. And it's connected to the downturn / recession or whatever the macroeconomic situation we're going to call it. Things have cooled down, basically. What's your like go-to recommendations that you would give early stage founders that are now in the midst of raising money and might have to tweak their decks in order to make it more relevant for the current state of things?
Yeah. Well, I mean, I think the first thing I would say is that the fundraising climate is constantly changing. It's always difficult to fundraise. Like, I mean, I fundraised in 2015, 2016, which I think now looking back are considered like pretty good years at fundraising. And I knew people with really good businesses that had a hard time, fundraising and finding good investors. So now it's probably a lot harder than it was a year ago. I think that's probably true. But I think it's important to recognize that unless your metrics are like this and you're just crushing it and you're already profitable and and all that, it's always fundraising is always going to be a challenge. Like that challenge is not going to go magically away one day. But I also think like this is a great time to build a startup. Like this is I think Andreessen Horowitz wrote this about they wrote this blog post build in the middle of the pandemic, and I think they're right. I think this is going to be now a lot of really good startups are going to be formed. And if you manage to make it through, through every like loans or, getting your angel investors to put in more money or finding that one fund that puts in a little money at a much lower valuation than you wanted to, and you make it through, I mean, you're going to be one of the few startups in a couple of years, especially to have something that's good. I mean, a lot of the trash is going to be cleared out now. And, in 3 years, when the fundraising climate is back and, we're back in good times, I mean, you are going to have a 4-year head start to everyone that's coming up with now, I should do my startup. I think it's probably a little bit gloomy right now. But I mean, that goes back and forth all the time. And you put the topic now, raising in a recession. And a lot of great companies have been started in a recession. So if I want to do a company, I think now would be a great time to do it.
Yep, good point. And I also noticed that like there are some, like you mentioned it, clearing out the garbage. The correction in the market is also valuable, right? Because if it's too hot, then companies that might not should have succeeded in their fundraising gets money as well. But now when it's a little bit tougher, like you really have to show that you're doing something different and that your product is actually solving a real problem. Yeah, that's a really, really good point. Can you talk about something more concrete when it comes to like, it's obviously harder now. You mentioned it yourself. When you raised a lot of money for InstaBridge, you did it pre-revenue. Do you have any thoughts or recommendations to founders now who might be pre-revenue or had like a pre-revenue story in their deck? What would you do if you were in their shoes today?
I think I'd, as quickly as possible, get the profitability or like get the revenue. But I don't think that's like a recession type advice. I mean, I think that's an advice I would have given 4 or 5 years ago too. I mean, fundraising without any revenue, like that sucks. Like, don't do it.
Yep.
Like, I did it. I banged my head in the wall. I mean, I came out kind of on the top. Like, it didn't work out in the end with InstaBridge, but we did manage to raise a little bit of money at least. But I think like find revenue early. Like, I mean, if I would start something new now, I would not build something that requires like 5 or 10 years of funding without any revenue. I think that's just wrong. So I think
deep pick.
I'm sorry.
Unless
Maybe there, of course, there are probably areas I know less about, like you're doing something that requires research, R&D, doing biotech, something like that. I mean, yes, then the economic model is completely different. That's true. But just generally, I mean, you should probably get to profitability and revenue as quickly as you can. I mean, it just feels so great to be in that position, to be in control of your own destiny. I think it's gonna change your whole psychology of you and your co-founders. So I think I mean, do that if you can. But I mean, that's not an advice I'm giving because we're getting into a recession. I mean, that's just a general advice for doing a startup.
Yep. Before we wrap up, we talked a lot about triggering emotions, getting people excited, a lot around like the main topic of that is all about storytelling, right? You did made some great examples on during the workshop. What's your methodology to like break down that company, the specific company that we were talking about? You really made it stick. You turned a quite a shallow pitch into an interesting journey and a great story and an opportunity. Could you share your methodology there?
I'm not sure I have a specific methodology.
You have 1 minute. Yeah.
Yeah, exactly. No, but the first thing I always start in, like, is always to simplify. Just remove. And I mean, I would even say, like, when I pitch Reason Studios, I start by making slides that are just full of text. That are like these boring slides that I hate myself, and then I cut down, like, what's the core of the message. I often try to, like, I guess everyone will have their own methodology, but like I try to tell somebody about the startup, and I try to tell my wife, hey, we're doing X, and I kind of see her reaction, and then I kind of write down what I said, and usually, like, it's easy to write a lot of words, But when you say something, it actually comes out a lot shorter. So I think that's where I start, like simplify and remove, and really thinking through like what's the core of the message, like what's the essence, like. And I think PowerPoint also helps me a lot. I put in PowerPoint and I use these layouts where it's like 36 point size letters, and I don't stop removing stuff until I can fit everything I wanted to say in these huge letters.
Nice.
Then you usually found the right balance.
Really good.
And anything that can't be said with 36 point letters in PowerPoint is not worth saying.
Yeah, that's a good point. Before we wrap up and end the fireside chat part of today, is there something like you talked a lot about the structure and what is there any difference between seed, Series A, Series B fundraising methodology, and what's your take on it?
I think at the end of the day, you still want to make people understand, like, why are we doing something that's exciting? People want to do, like, it doesn't matter who you are, like how much money you're investing. If you're SoftBank and you invest in WeWork, you want to be part of the exciting journey. I think that's always the case. I think the big change is just this we talked a little about before, but like with the KPIs and the metrics. You can't raise a Series B. I think that's physically impossible. Like, you can't raise a Series B without X million SEK or dollars in revenue. Like, I think that's the big thing. And, things like due diligence later on in the process are probably going to be a lot rougher. And, there's more parts of the story that, like, sub parts. You have to explain your technical platform in more detail. You have to explain your product strategy in more detail. It's not just a general, like, 10 pitch deck, but I think the general principles, they definitely still apply.
Nice. Any last words you want to send the founders, and a message you want to send to the founders out there who are like trying to get out those first meetings and build up that prospect list of potential investors?
Don't stop trying. I met, in our seed round in Instabridge, I met maybe 50, 60 investors that turned us down. So, I think keep going, keep working on your, not just your pitch, but like what you're doing, like take the feedback to heart, like see where does people trip up, like, what parts of the startup are you not excited about? Like, what are they not excited about? And, just keep refining that, and don't just refine the pitch, refine what you're actually doing and find the core of that, what's going to be exciting, and you're going to do great.
Awesome. Really, really relevant and good last words. Niklas, always good to catch up. Good having you in today, and thanks so much for I know you're a busy man. Thanks for taking your time.
It was a pleasure. So much fun. Thank you.
Good to have you, and thanks for those who tuned in. See you around. Bye.